Good morning, everybody. Hopefully, you are all doing well early this Tuesday morning. I want to take a look at a weekly outlook this morning, just go over everything. Before I do, though, there are a couple of things that I do want to talk about, things that I feel are salient to basically any trader coming into these markets and learning, growing. So, many of you guys starting out at first coming to trading with the idea behind the whole fact that it's an opportunity to make a lot of money, do so in your own time without having to do too much. Now, at first, that gets you sucked in and that gets you diving in, doing more research. And eventually, you find out that it's not as simple as that. And there is way more to trading than what you thought at, at first. And eventually, you probably come across these small streams on over the internet, on TikTok, and these shorts on YouTube, these little quick little 3 minute, 5 minute, 10 minute videos where people talk about certain things or they put these little clips of ICT and they take those from the 2020 and the 2023 mentorships. And they take those clips from what was the Twitter spaces that he had and they just throw them in there without throwing the majority of the uh, the discussion, the really important parts that just gets discarded. It's just quick, get to the point, 3 minute video, which is not really going to be beneficial to you unless you understand the underlying features and the premise behind what was said. So it's not as easy as that. Perhaps some other guys would dive into this stuff and you would come across the retail trading world and you're going to find all these patterns, bad patterns, harmonic patterns, levels, or trend lines, all these retail garbage. And you will quickly find out that it's a complete waste of time since the market does not move with just patterns. You need to have underlying narrative and reasoning to why the market would move in the first place. And that is liquidity and inefficiency, along with macro timing. Certain times of the day, the market does certain things. That's just the way that it's programmed. So a lot of these live streamers don't really touch base on these topics. And trading itself really is like 10%. That's 10% of it. Just really just finding that entry model and pushing the button. That's like 10% of the work. The real work, the 90% of the work is basically stuff like psychology and experience, just from sitting down in the markets and looking at past data, looking at present data, and forward testing, actually going into your journal and noting things down, seeing them repeat. And then again, we're also bringing our daily lives into these charts. So it's important to have a section in your journal where when you sit down that specific day, that you note down exactly how you feel for that specific day. If there are things that are on your mind, things that might be a hindrance to your trading, that might keep your focus off of trading and what you really are in the market to do, which is at the end of the day is to sit down, to take a trade, to make money and call it a day. And that should be a filter as well. If you're not feeling good today, or you might be angry or you might be mad, then you're probably going to be sitting down and you're inside of the marketplace for the wrong reasons that particular day. Your judgment is going to be clouded, and chances are you probably are going to take a loss. And if you do take a win, then that is just not winning for the right reasons. So that's something important to note as well, that when you're not in a clear state of mind, then it's probably a good idea to not look at the markets and to sort those things out in your personal life first before you sit down and look to come into the marketplace. Now, a lot of guys would say and argue that ICT probably he likes to ramble and talk nonsense. And a lot of other guys would argue and say that it's good that he goes on rambles and he makes he has his own way of teaching things, and he incorporates that 100% into his lectures. And some might agree that that is a way of you being patient, learning how to sit, be patient, watch the market, and not get bored of that. Sit there and watch it. Keep studying it. Even though you probably don't want to do that. You really want to get up and do something else, but you're going to sit there and you're going to study the market, even though it's really boring to do so in the beginning, especially when you really don't know what's going on. And it feels like you're learning all these new things and you just don't really know how to piece all that stuff together. I personally believe that ICT teaches the way he does purposefully. And if ICT was here, then he would 100% agree with that, that he teaches in a way where he filters people. If you're going to be somebody that's lazy, somebody that just does not want to put in the work, somebody that wants to sit there and you want to watch these videos, not really go into your own charts, you're really quickly going to get bored of this stuff, and you're just not going to be profitable unless you put in the work and journal and actually study this stuff. Now, I believe ICT, he likes to sit there, he likes to go on these rants, which they're not meaningless. He has a really wonderful way of teaching psychology and bringing that into his mentorship and his teachings. That's, again, that is another part of trading that is really important, which a lot of people tend to overlook that as well. Psychology, just emotions in general, it just plays a really big role in trading and profitability. You need to learn how to manage your emotions, keep your emotions in check, and really get emotions under control in such a way that you really follow a strict process. There is no if thinking when you're in a trade. You know exactly what to do when this happens, or when that, or if something else happens. You know exactly what to do. There is no guesswork. And that takes away the emotions that would be involved when you're in trading and during a setup. So I believe that he teaches that way to, number one, give you patience, and number two, what he really wants you to do is he wants you to keep on studying candlesticks. He wants you to watch what they're doing. It's like tape reading. As he's talking and as you're watching the levels on his charts, he really wants you to look at the levels and see how price is reacting at them. And we've been doing that on the 1 minute during some of these live streams. We've been tape reading like that, just watching the candlesticks, watching how it trades from here and trades to the lows. He wants you to look at time, look at what specific times certain things happen. And he's not going to blatantly tell you that you got to go look at this specific time. He's going to sit there, he's going to talk about something else. Something's going to happen on the charts. If you're not paying attention, it's going to blow right over your head. So I believe it's a wonderful way of filtering people. If somebody really wants to get into this stuff, really wants to learn this stuff, the successful trader will be the guy that will be able to sit through that, and he's going to be able to watch that tape read of an hour or 2 hours long. And he's going to be sitting there with his journal. He's going to be focusing. He's going to be looking at price, seeing how those candles react at certain levels. He's going to note the time. He's going to note and see ICT is referring to maybe equal lows. Maybe he's referring to a certain fair value gap. Maybe he's referring to a specific time of the week, a day of the week, maybe a specific news event. It could really be anything. A lot of people think you're going to come into this stuff and you're going to go through that mentorship and you're going to be done. And it's going to be smooth sailing. It's going to be trading, sitting down, trading, being done. When honestly, that's not the case. You're really being prepared in a way to come and sit in front of your own charts without any mentor and sit there, study price, watch the charts, and most definitely have a journal open. And you're going to be sitting there for sessions of 1 hour, 2 hours, maybe more. And you are going to be studying price. You're going to be tape reading it. You might be back testing it. You might just be sitting there preparing for the week. Maybe you're preparing for the morning. Maybe you are coming to sit down and you're hoping to find a setup at a certain time, but maybe the market is sideways and you have to sit through and you have to wait and you need to look for certain signs for that market to show you that it's going to rally one side or the other. And you're being prepared to be able to have the patience to sit through that on your own with nobody holding your hand. And really, it's a weekly thing. You're going to be doing that on a weekly basis. And odds are you're probably going to be doing it more than just once or twice, depending on how many days you're going to be sitting and trading or how many days you're going to be sitting there, you're going to be studying. So you're being prepared for these things. And a lot of people probably are just not aware of that. I mean, I started studying back when, I mean, TradingView was not even a thing back then. We only had MetaTrader 4 back then. And there was no such thing as any funding company or no jazz like that at all. And most of the industry were trading mainly Forex back in the day. I remember back when I started out, I was mainly looking at the euro dollar and pound dollar. And then I was looking at the cross. I was looking at EG. And of course, I was looking at dollar index. And just comparing and seeing what my bias was. And then seeing which one of the two pairs was going to be the one that was going to give me the cleanest run. And then you would execute on that specific pair. So EG was used as a filter to see where the strength or where the weakness was and which pair was going to be the one that was going to be weaker. ICT briefly touched on some different markets in month 11 and month 12 of his core content. But that was it. He didn't give us all these fancy macro times. And back in the day, I remember that I was looking at these people trading the US 100 or US tech, depending on what type of broker you were using. And I remember thinking to myself, wow, this thing, trading that thing is, I don't know, man. Just rallying up higher. And it's a lot of money that's moving with that thing. If you were trading one lot, a lot of money would move really quickly across that board. One standard lot would move a lot of money really quickly. And I remember a couple of guys trading the gold back then as well. And again, that would be another really big mover. You would really, a lot of movement would be seen with one contract or one lot in gold. So we didn't have all these fancy things, prop firms and all that jazz back in the day. We had MT4 and that was it. Back in the day, TradingView was a little tool when it just came out. It was this little tool. It didn't have as many features as it has today. wasn't as nice to use as it is now. Wasn't as customizable, and it was free back in the day. I think it was free for quite a while before they started charging you money to use it anyways. So you had to take your own money, and you had to get that into a reputable broker of your choice, which of course you had to go do your own research on. And you would be trading with your own money. You would not be using some demo with a prop firm and then getting a payout off of that. The good old days. If you know, then you know. Anyway, a touch on prop firms. Prop firms, we have seen a whole bunch of prop firms rise up and a whole bunch of them just disappearing overnight and closing up shop. I believe prop firms are a really nice tool if you're on a demo and you're able to go into uh, do a simulated drawdown in an account, and you're able to take that recoup that drawdown and take that account into a profit, and then reset the thing and take it back into a drawdown, do that again. If you can do that over and over and over again, and if you decide to make the decision that you are ready for a live account or trading with real money behind the whole behind behind the thing, then prop firms are a good tool to get started. If you don't have a lot of money, which things are expensive, times are changing, it's things are not as cheap anymore, and it's probably just going to get worse anyways from where we're going to. So not everybody has $10,000. You can just throw at an account, start up, great, you're good to go. A lot of guys are probably going to look at a prop firm, and you're going to look at probably a 50K or a 25K, and you're going to look at taking that. You're going to look at getting the 1 to 2 stages, getting it done, getting into an environment where you can trade, where you can start getting your payouts. Now, like I said, prop firms are a great way to get started. You go in there, they give you simulated capital to start with, and once you pass the stages, you can start making money. And my recommendation would be, don't keep your money laying there. Don't try to grow that account. The profits that you make sure that you pay yourself. Withdraw those profits. Don't keep it laying in that thing, because we've seen a whole bunch of prop firms just disappear overnight. So if you can do your withdrawal, you take your money. Take your money and take that money, put that money aside. Don't go and don't spend that money. Take that money, put it aside. Your goal is to grow that capital, put it into a brokerage firm, and from that point on, you can trade with your own real money. in a reputable firm. That should be the goal. The goal shouldn't be to grow that thing, get the biggest payout. Screw that stuff. Forget about it. You're going to wake up, the money's going to be gone, and you got nothing from it. Take your money and open up a brokerage account with a reputable firm, interactive brokers. We have Iron Beam. We have a whole bunch of guys in the industry that give you live accounts, and you can start taking the funds. You can start depositing small amounts of the funds into the account. If you're going to be somebody that's going to be irritated by the money just sitting somewhere and you're looking at it, it's bugging you, then just deposit it into the brokerage account and start growing, start building that account up. Get it up to a 2K, a 5K, and ultimately the goal should be a 10K. That is the minimum to get. If you want to trade futures, that would be the minimum to start trading the NAS as well as ES. And make sure that you guys go do your research very diligently on whatever brokerage firm that you do decide settling upon. Make sure that you go on their website, look at the minimums, look at the requirements, because they do have minimums on different types of things that you're gonna trade. If you're gonna be trading futures, go look at the minimums for the uh for the minis, and look at the minimums for the micros if you're planning on trading micro contracts. Make sure that you guys look at that. Other important things to look at are, make sure you look at the deposit requirements. Make sure you guys look at the withdrawal requirements. Some of these guys might give you one withdrawal that would be free of a fee a month. And from there on, you might be paying X amount of dollars, which might be something like $30 or whatever, to get a withdrawal on whatever amount of money that you choose to withdraw. So you have to go look at the benefits and the drawbacks of each of these brokerage firms. And at the end of the day, you have to decide which one is going to be best to suit your needs. Now, many of these firms, as an example, interactive brokers, they are known worldwide. They have been a part of the industry for many, many years. And you are able to trade multiple things like Forex, futures, and many other assets. You have to go look at the requirements and look at all the underlying questions that you might have. And then another thing that you're going to have to look at is if you are going to be using TradingView as your platform. If live data is not supported, then that is something that you're going to have to get into. And you probably are going to need to get some sort of a package from the brokerage firm, which is, again, that is going to be something that you pay on a monthly basis. Usually those fees are not a lot, like $10 or $11. It depends on what things you are going to be looking at to get there. And then you're going to be looking at trading platforms like TradingView or NinjaTrader or whatever other broker platform that you choose to use. So looking at these prop firms here, and as an example, I'm just looking at Apex, uh, Apex Trader Funding as an example, and we're just looking at the 50K and the 25K accounts here, which these are for futures, I believe. Now, many of you are going to be looking at the 50K or the 25K. So let's look at these numbers here. They include the real-time data fees, which are $55 valued included. Ninja Trader license, $75 included value. So chances are, if you're going to be choosing Apex, you're probably going to be going with Ninja because they are compatible. They don't have any scaling. There is no daily drawdown. They do have a trailing threshold of $2,500 and a profit goal of $3,000. Contracts 10 minis, 100 micros. Now, you're completely going to disregard those 10 minis and 100 micros. Starting out, you are going to use one mini, and that is that. You are not using more than one mini. That is the quickest way. If you jump from demo into this with live money behind it, quickest way to blow this thing is by doing more than one mini. And the simple fact is that the jump from demo to live is an emotional thing, and you are going to be looking at that number value, and your butt picker is going to be puckering because of that uh, value there behind that, because now you have a goal that you need to obtain before you pass on to the next stage and then get funded. So it's an emotional thing going into live, and that is something that you overcome by using your smallest contract size available. And it's not needed for you to trade more than one contract to get this profit goal of $3,000. So they give you a quote unquote $50,000, which basically is a $2,500 account. Since that is, if you blow the 2,500, it's done for, you lose the account. So you basically get a $2,500 account, and you need to make $3,000 profit on that. Now, if you go in, do 2 setups a week, you bank 5 or 10 handles, and you do that on one mini, then that goal becomes very obtainable in a short amount of time. You're not going to go out there hoping to do this thing in 2 weeks or in a month. It might take you 2 months to get the thing. But once you have that account, and once you've passed the stages, then you can start getting your withdrawals, right? That's the goal, is get to the point where you can get your withdrawals. If you are doing the 25K, now notice here the 50K full is $167 a month, which not everybody is going to have $167 a month to contribute towards that. And if you're going to have to pay that for 2 months, before you pass the eval and do the combine and before you get the account. That's a chunk of money, right? So some of you might be looking at going for the $150 a month, and you might be uh, doing this one. And with this one, you have a 1,500 trailing threshold and a $1,500 profit goal, which that is very obtainable. A very obtainable goal here as well. Most are probably going to go for the 50K just because that gives you a bigger trailing threshold. So let's look at this thing. Let's see here. Trade of 8. So these are the rhythmic ones. Let's get you to stop scrolling down here. Then you have a trade of 8 specific one. Trade of 8 is going to be more applicable if you're not going to be using Ninja. You're probably going to be using the Trade of 8 platform for this one, which it's a little bit more expensive. But essentially, more or less the same features, right? So let's just click on this thing. Let's just see if it's still like a two-stage thing here. Okay. So I guess that information is going to be displayed on the website over here, probably at the about section. I'm just not 100% sure of this stuff because honestly, guys, I just don't use these prop firms. We have 100% of the first $25,000 per account and 90% beyond that. You get 2 payouts a month, right? Okay. So that is a crucial point. 2 payouts a month. So, which probably is going to be every second week. Again, that comes back to get the thing. And if you're able to get a payout, then you snag once a month, withdraw that payout. Or if you are able to and you have made more profits, then obviously withdraw 2 times a month. Trade full size contracts in evals or funded accounts. There is no scaling or falling by going over contracts. Failing, no daily drawdowns, no trade on holidays. Okay, trade on holidays, that is a no-no. You're just not going to be trading on days where it's a bank holiday in the US. You're not going to be trading. You're going to be sitting inside of consolidation. You're going to set up yourself to blow the account. So just don't trade on holidays. Trade your normal day-to-day strategy or system during the news. Again, you're not going to be looking to take a trade in NFP or something crazy like CPI. Just don't do that. No total cap, a one-step evaluation, real-time data, simpler risk management rules, trade with multiple accounts up to 20 max, which some of you might be going for. In the beginning, I would probably recommend you just take like one account and pass the one account. And once you start to get more comfortable, then maybe get another one, pass that one, copy trade to that one, At the end of the day, the goal is to have your multiplier taking the same trade with the same amount of risk, and having that multiplier double your money. Or maybe you want to take certain trades on the one account and maybe trades that are more risky, trades that are less probable in the other one. That's just going to be up to what you want to do here. Mm, what I want to look at here, one step evaluation pro. I'm not sure if it's like two steps anymore. They used to have a thing where it's like two steps for a before you go get the live thing, before you can start to get withdrawals. That used to be a thing. Let's go to home. Let's see if home tells anything. I just don't really know about this stuff because I just do not. I really don't care about prop firms. We already, yeah, already saw that about. Okay, don't really care about that. Evaluation accounts. Seems like they give you like one eval. If you pass the eval, then it seems like you go into a live account or an environment where you could withdraw the profits, I guess. Let's just see here if they say something about it. Okay, this is a sign up page. We're not gonna care about that. So yeah, I'm just taking this as an example and talking about this in a general. Most of these prop firms are gonna be regulated and they're gonna be allowed to keep afloat, or in a different sense, they're gonna be allowed to keep on doing business. And a lot of these other guys are just gonna shut their doors when they get regulated. That's just going to be a decision of the big boys. They're just going to decide if these guys are going to stay in the long run or not. So as I said, I would just recommend you, if you start out, funding is a problem. Prop firms are a great way to get funding, get yourself money put away, and ultimately go into a live environment. Some of you might prefer just not doing funding because you feel like it's too big of a risk, or you feel like you might do that, you might lose your account and then you paid the fee for that, or you might pass the thing and you might have a withdrawal rejected, or whatever the case might be, and you might choose to go for a live account with a prop firm, and maybe you're gonna do micros, and you're gonna some of these guys do allow you to trade micros if you open up a $2,000 account. Again, you have to go and see what those minimum thresholds are to trade micro contracts with whoever you choose to end up with. And then you take it from there. And obviously, what profits you make on that are yours to withdraw, or keeping the account and grow the account as you see fit, which that is nice to know that you can decide what happens with your money. You can decide if you want to withdraw or if you want to leave it there and grow the account, knowing that they're not going to disappear overnight. The likelihood of that is lower than these prop firms just disappearing overnight. Obviously, in the long run, Don't put all your eggs into one basket. Put a couple of them in a basket, put a couple of them in a different basket, spread it across the board, and look for a different firm and open an account there as well. And you would have that peace of mind knowing if one goes down, you have the other one. And you should have a backup plan that if one does go down and you do, for whatever reason, lose the funds that is sitting in the account, then you should have a amount of money set away for that scenario. If that happens, that you do have money that you can put into a different account at a different firm that allows you to obviously get back into it and do what you do. And then obviously you would recoup that, the funds that you have lost, and you would obviously make recoup that little kitty of money, and you would put that away again if something does happen, which I feel like, again, that it's just stuff that a lot of these traders don't talk about, and it's things that you really should be thinking about. And these are things that when I came up, these were all salient questions in my mind, like, where do I go? What type of brokerage firm am I going to use? What happens if brokerage firm per se, whatever, just closes their doors and I lose the money? Then you would need to have money somewhere set aside that you can take and put into a different account somewhere and go on with your job, be able to provide an income again. It's all things that I feel like people are not talking about these things. And for the new trader, might not be important at first, but eventually when you're going to start looking at these things, for sure, if you were guided in a direction, then that for sure would have been helpful in my learning, I believe. At least for me, in my opinion, I would have appreciated that if, if we were in some way introduced to that stuff. But anyways, I luckily we have the internet and we have YouTube, so we have all these fantastic resources at our fingertips, and we can do research on certain firms and see where we want to invest our money and what works best for us and what does not work best for us. Anyway, with the big discussion out of the way, and I believe some really salient points were covered today. Some questions that I definitely had when I was studying the stuff, and when I was eventually looking to get into a open up a live account. All things that I would have appreciated if somebody sat down and said, "Hey, maybe look at that. Maybe look at this. Maybe approach it this way. Maybe you want to do it that way." Anyway, I quickly want to look at the seasonal tendency for the NAS. So for NAS here, we formed a low, and we could have there's this retrace up that we're seeing right now. Retrace up, sitting sideways, and that would be expected to be seen in the 24-year, as well as the 15-year, as well as the 5-year um, periods on your seasonal tendency chart. Expect that low to come in, expect that retrace. We might still go a little bit higher, or we might start to tank towards the middle of the month. 15 years suggests lower prices, 5 years suggests a rally lower after the consolidation, after the retracement. However, the 24-year trades down but still stays in a consolidation. For the dollar index, we have dollar index form a low and then rally off higher towards the middle of the month. That can be seen in the 35-year and 15-year seasonal uh, seasonal tendency plotted. The 5-year, however, suggests an initial rally, uh, first a drop down and then a rally up higher, and then tanks down lower towards the middle of the month. Now, some of you guys might not care about the seasonal tendency, and I was, believe it or not, one of those guys that I did not care about the seasonal tendency when ICT first introduced some of us to that, uh, to his seasonal tendencies. And I just thought that it was something more that I would have to look at and add to the charts. However, later on, I have found that the seasonal tendency is really, really helpful. By the way, I have already mentioned you guys can go and get the seasonal tendency at more research. You can just Google that and you will find it on Google, and then you can just go and get them on the website. Seasonal tendency, like anything else, is a tool that ICT gives you, and ICT gives you toolboxes full of tools. You're not going to be able to use toolboxes. You're going to have to pick and choose what brand of tools you're going to use, and you're going to build yourself one toolbox that has everything that you need. So, in the beginning, a lot of you guys are probably going to go over the core content at some point after you've done the 2020 mentorship, maybe the 2023 mentorship. You're gonna maybe want to dive into that to get a little bit more in-depth view of some of the tools that he uses. And you're not going to be able to use all of those tools. Not everything is going to resonate with you. So just know going in that certain things are going to resonate, certain things just are not going to resonate. Take the things that resonate, incorporate them into your model, and the things that don't resonate, you don't need to use everything. So I like to incorporate the seasonal tendency because the seasonal tendency gives somewhat of a directional bias. It's not per se that seasonal tendency shows me a bullish run higher and I'm going to go onto the chart and I'm just going to go in and buy it. That's not how it works. You're going to have to go in to the charts. You have that as an underlying premise. You're going to have to see if the market has that opportunity in play for you to get in line with a short. It's not going to say that there is going to be one. There might be one, or sometimes, and it does happen, and ICT has said the same thing. Sometimes we're gonna trade against that seasonal tendency. And for per se, as an example, the month of August, we're just gonna have a bearish run. It's just gonna trade down lower. It's completely gonna ignore the seasonal tendency and do its own thing. And sometimes that's gonna happen. But beforehand, you will know because you're gonna look at the chart and you will see the signs with the signatures that price is gonna wanna rally lower. So we have been trading higher here. Really bad price action. Friday, Monday, not good. Really sideways, choppy. You can close this apex thing. I'm gonna pop the calendar over. Let's refresh this thing. Guys, this is a messy week here. Last week, yeah. Really messy week, guys. We have PPI at 8:30 today. Wednesday morning, we have CPI. Thursday at 8:30. Not as heavy as PPI and CPI. We have core retail sales and unemployment claims. Okay, not as heavy as CPI. CPI is going to be the big red bazooka. On Friday we have building permits at 8:30, and we have prelim UM consumer sentiment at 10 a.m. By the way, we will be doing a tape read session Friday morning from 8:15. We will be doing a tape read session. So be sure to tune into that. So as you can see, we are sideways. Okay? Low probability conditions. Monday we traded down, took out the lows. That set the stage for these guys to go up higher, take out these equal highs. Took out the equal highs. Both sides cleared, traded into inefficiency, sat inside the range, and that is that. So not much going on. Look at it on a 1 minute. Let's see here. Ranges are still pretty big. 935. I wouldn't have been looking for anything at 935. Nothing clean there. 950. Meh. We do have that breaker block there. Inefficiency. Never traded back into them. Just rallied off higher. Fair value gap guys would have, you could have taken that underlying premise with that market structure shift. Yes. Displacement. Yes. Expect them to rally up to the high. Market maker buy model. Time of day 10:10. Fair value gap. You have a fair value gap. Fair value gap. Fair value gap. Might be something on a higher time frame. But anyway, fair value gap, guys. Maybe 10:11. Maybe that was an entry. 10:21. Extend that through 10:29. Might have been a fair value gap trade. 24%. Nothing major. And then later in the day, we tanked down. This looks like the cleaner run of the day, too. 11:21. So that will be heading into the lunch period, trading back into these inefficiencies and that breaker block there. That happened to be traded right into that, stopped, and traded back up higher to fill these inefficiencies. Not very clean. Nothing that would have given me displacement with trade back into it like a fair value gap, get involved and trade it now lower. So fair value gap guys might have been taking something there, maybe took something here for a short run up, clear these highs out. I wouldn't have gotten involved with this here. This is really messy here. Remember, we had on stream, we had price just tanked down like this, and then we had that whole session about going on how we wanted to see it fill back in some of that range. Really similar move here. Very similar. Order block, taps into the order block here, taps into it again. 1141, 1142. Trades through that order block here. Comes back into the mean threshold of it. 1146, 47. That's close enough to call it the 1150. 1210. Gave a little rally higher into these inefficiencies. That's about 33%. So more than 10 handles. So maybe that would be something somebody got involved with. Later in the day after lunch, tanked down, didn't take out the lows, back into that order block, back up into inefficiencies. Last down candle, it rallied through that, traded into it there. 1 o'clock, pushed higher, came back into that 113, rallied up, filling this inefficiency. So it's back and forth, up and down, up and down. Yes, it is possible to take trades in these environments. But if you don't know what you're doing, it's very easy to blow your account. You have to be comfortable sitting on the sidelines, staying out of conditions like these, wait for higher probability conditions in the market, and execute with higher probability conditions. And a lot of you probably, if you are new traders, probably think the more you trade, the more money you're going to make, which that's wrong. The more you trade, the more you will go down in probability because of the fact you're going to be taking trades that are low probability just to take something for the sake of taking a trade or doing something that day instead of going out and planning the week, looking at certain days that you do want to trade, which from experience should bring something to the table. And if something with a higher probability comes into play, you execute on that setup and you're done for the day. And if you're trading 2 times a week, then you would find one more day where you could grab X amount of handles that you need, done for the week. Or perhaps you're doing one trade that week and you're done. Even though there might be another day which might have a favorable probability to get another setup. You're not going to feel FOMO because of that, because you know that it repeats and you've already made what you wanted to make for that week, so you are done. And that keeps you taking high probability setups, gives you a clear point of view over the marketplace, and believe it or not, but you will have a higher probability uh, for a win rate when you are taking less setups and you bank those home. Anyway, getting into the analysis here, this is a breaker block. Let's get rid of some of this stuff. Might still want to leave that daily gap there. Look at that gap. Still keep that in play. If we trade below that gap, then chances are we probably will start to see price rally down. So I'm using this gap as a filter. We trade into that gap. We trade below the gap, close below that. Then we're going to target this low and we're going to trade this low here. And then these guys are going to be on the table. If we stay above that, then we'll be looking to see how price, we have tapped into this breaker block. So it'll be interesting to see how they react at this level here. Does overlap with this daily fair value gap, which that is now going to be, should have been an inversion, but anyway. Interesting to see that that is the low of it. Also, that lines up with this breaker block here. Daily breaker block, which also you have a fair value gap in here, and you also have an order block here. Okay, so I'm not going to note all of those things. Breaker block, I keep these other levels noted in my journal. For so far, we have retraced. Oops. So we barely tapped into that break. It'll be really interesting to see how that looks on a 15. Pull that daily gap. So something that I don't like here, just moving down with the time frames. Just jump into a 15 real quick. Big part of the reason why we're sitting sideways is the fact that we're trading inside this daily gap and this daily inversion, as well as the breaker block here that we tapped. So we're sitting on a daily, we're sitting between these two PD arrays. We did have a nice reaction here at this level. Nice reaction, tapped it, closed below that breaker, closed below the daily inversion, rallied down below this low here. We do have equal lows down here. Equal lows, relative equal lows down there. Equal lows down there. We do have these order block, another order block, extend that through. So at this point in time, it's conflicting here. Higher time frame still supports. We are still seeing bullish PD arrays respected here. Something to be mindful of that could suggest that we will see high resistance liquidity runs. See that? We tapped into that 4-hour order block. Did we tap into it? Not quite yet. But that 4-hour order block does overlap with this is a 15-minute order block. We tapped into it. And if we go down into a 5 and a 1 minute, see, we had a reaction at that level. We traded higher. That is something to be mindful of. So I'll take note of this. That in green. 7. Yeah, we could probably extend these a little bit. So that's what I'm seeing here so far. We got a reaction at that daily breaker. Again, higher time frame is the parent time frame, and the lower time frame is subordinate to the higher time frame. So we traded into that daily breaker blocks. We had the reaction, price ran away from that level. So ideally, I would want to see price stay in line with that idea and trade down lower to these equal lows. That would be something more textbook to see price trade to these equal lows here. And if it wants to go down lower, then obviously trade down into those equal lows below. But remember, seasonal tendency did suggest that higher run. So that is something to be mindful of. We also have this inversion, tap the consequent encroachment. Okay. So that is, I would say this is underlying. We have underlying, we already traded into this inversion, rejected, moved away from this level. So if you find a setup lower, then that would be underlying. That would be supporting your trading idea. We also have this gap here, which is salient to note since we are sitting inside of it. Salient to take note of that. That is another, that is a fair value gap. It's not an inversion. So that's the one that we currently are trading inside of. So that I would use this as a filter. If we trade above this 15-minute fair value gap, then I would be looking for price to continue going higher. However, if we do reject, stay below this, then equal lows would be in my scope. Now, this is just looking at the US 100. I've not yet touched the other pairs or looked at the dollar index to see what dollar index is doing. Looking at a 1 minute, you see we have these clean equal lows. Looks like a market maker sell model that is forming here. So that's just what I see by just doing a little top down analysis on US 100 NAS. Just looking at that idea. Let's look at dollar. Really sideways. See here. Still have this equal low in place. Still going to be relevant then. Daily fair value gap. Shoot it into this. Go up into the daily. Daily fair value gap. Take that. I would quadrant this. Don't want to put that on there. Put a quadrant. Put the fib on there. Get the fib out. Lower quadrant. Extend that through. Not something I'm going to note on the chart, but that's something that's in the back of my mind, something that I'll be putting down in my journal. We are at the 25% lower quadrant, traded into that, rejected it, closed below that daily fair value gap, tapped into it again. We can see the candle body failed to give us a closure above this. We closed down lower. Same thing happened this morning here. So those are things that I look at. Get rid of those. For our equal highs would have been taken out last week. Okay, we can get rid of those. Took out these highs here. Yesterday, we took those out. That's something noteworthy. This would be a order block here, this candle. Last up close here. Moved away from that, came back into that. We rejected it. So that would be an order block for me. Something that we will look at on a lower time frame. And then my eye gravitates towards, we have these relative equal lows, that relative equal low, or our relative equal lows. That's what my eye gravitate towards. That is, of course, if we respect this idea trading lower, which you can see we failed to get back above this high, failed to get above this high now. So the price action is indicating bearish prices by respecting bearish PDRAs. So we're still bearish. Gonna make that red in line with this. Leave that the same. 1 hour chart. Messy price action here, guys. Messy price action. We have this massive fair value gap there. Okay. We have that. We've filled that in completely, but we're still hanging out inside of it. So it's important to note the low high, get the consequent encroachment, extend that through, look at that on your lower time frame because we're trading inside that zone. We have traded at the just eyeballing at consequent encroachment. Again, we took out these highs. And we have not yet taken out the sell side. Last time was Friday that we got down there. So we do have liquidity below this low and these equal lows here. We do have this gap here as well. Something else to take note of. High, low, higher, high. If it trades down there, potential breaker block for us to look at. 4 hour order block. We also have this 1 hour order block here that lines up with that. Not much here else that I would note. Breaker block on the 15 lines up with that order block. Fair value gap, fair value gap, balance price range. Pull that through. Pull that through there. 15-minute BPR. Look how we traded. Look at the candle bodies. I mean, it doesn't get better than this. We appreciate things like this when candles are as clean right at that low right there. If you're a seasoned trader, you appreciate things like that. You appreciate seeing things like that. You just know that, yeah. So we have that, and we have this breaker block. I'm just gonna note the breaker block in a of a rectangle, since it's the whole range of that candle. So you want to be looking at the mean threshold of it. We did trade below that impulsively. So if price comes back into that, then that would be the potential catalyst that sends it down lower. Look at a 5. Look at the 1. Could be a market maker sell model here. Look at all these relative equal lows or trend line liquidity. Look at all those lows right there. It's just too clean. Too clean. Needs to be made jagged. So that's a potential sell model coming into play. So dollar basically, I see a rally with along with the indices here. I like the fact that we closed below that, traded back into it on the 5. To me, that's the cleanest. We do have this candle here, which lines up with this 15-minute, with the 15-minute structure, trading into that, clearly rejecting and rallying lower. So that would be what I would be looking for in dollar index. Let me just switch this screen over to the US 500. Okay, you should be looking at the US 500. Again, I'm going to keep that daily gap, keep it as a filter, that same order block structure we have here as on NAS. So, of course, I'm going to take note of that. Well, let's just keep it red, I guess, for our order block. Hmm. Not seeing that same breaker block being tapped here. We do have that breaker block sitting here, high, low, higher, high. But we're sitting inside of this. It's going to be messy when I annotate this. We're sitting inside of a fair value gap, which consequent encroachment of that. So daily fair value gap, consequent encroachment, but that's where we are trading at. And then obviously above that we have the breaker block. Breaker block. Breaker block on the lower time frame as well on the 4 hour. That is confusing. Inside of that one. So we know here what the difference is here. So we're sitting inside of that daily fair value gap, consequent encroachment, 4 hour order block, tapped into that. We have taken out these equal highs on Monday. That is something to note. We did clear them again in Asia. Relative equal low, imbalances, relative equal lows. We do have this relative equal high here, although we did tack above that. Checking on the NAS, we had a SMT in that particular area where NASDAQ was unwilling to go above that high, where the ES would did trade above that high for the stops. So I'm not going to note that as a equal high. I like the idea of the fact that we have these lows here, those lows. Again, looking at sell side, it's good to see that we have a similar idea on NAS. Let's just make this order block green because I made the other one green. Keep that all the same. Gonna have to extend that through. Relative equal lows on the 1 hour. Relative equal lows. These are more equal lows, I would say. Equal lows on the 1 hour chart. Basically, I'm going to be looking for that same idea, price trading lower. On a 15, quite interesting. I would use the same I would use this same inversion. I don't know why on the NAS noted that as 15-minute inversion consequent encroachment just because we traded into it. Oops. Anyway, 15-minute inversion. As long as we stay below this, that sets the stage for lower prices. We have equal lows here, equal lows there. You don't have to note every single one of them. Just know price is gravitating towards relative equal lows. Looking at the 5, close below that, tap back into it there. Volume imbalance, traded back into that and tanked into 4-hour order block below these equal lows. On the 1 minute, we had a nice trade up into this with a fair value gap that had a nice displacement lower below this low. Nice little run, nice little runner down there. Nice little trade. I'm looking at this area here because look how we had this small gap here and we traded into that on this specific candle here. We tapped into that gap. I'll put a box on it so it's easier to see that. See that? We tapped into that, and take note that we did not come back up as high into that particular level. We only tapped into it there. One last time, They hung around a couple of minutes, tapped the low, candle closed off lower at 0619. Barely tapped into the low one last time. Thanks. Okay, institutional order flow entry drill. Not the cleanest example. In a perfect scenario, you would want to see price trade into that fair value gap once and be off and done with it. We did trade into it multiple times here. Another example would be looking at this. Didn't trade into that one. I believe it's this lower one. Traded above the high, above this high. Tapped into it 633. Tanked. Okay. Institutional order flow entry drill. That's what that looks like. Let's go over to the US 30. Let's look at this. Really messy. Sitting sideways here. Don't like the fact that we have equal highs here. We tapped into this low, traded slightly below that. We have now left relative equal lows here. If this candle closes off higher, leaving that daily gap in place. Just see here, daily gap, leaving it in place. Still have relative equal highs. Still have lows in place. Just not clean. Just don't like this price action here we have on this pair. That's why I look at the Dow, but I don't trade the Dow. All of this would overlap with this 4 hour. This would be a order block. So that is a level that I would take note of. Because that's the only candle sitting right there. So I would just take note of that. We are trading right at that level, but I would still have that on the chart. Then we do have this low, so I feel it will be salient to have this low on the chart. So that's a 4 hour all low. Could be a relative equal low as well, since we have this low and we have, if this candle closes like that, then we have a relative equal low, which is probably going to be the case on the hourly chart. And then we do have this BPR in this area. BPR over there. See, on a 1 hour, it's going to be a equal low or relative equal low, since we did trade below that low, but we still have this low and that low in place. Could say that we have these lows here as well with these inefficiencies, relative equal lows. Lots of clean lows in play here. We did trade back up into this wick. We traded up into the 75%, the upper quadrant of this wick. Tapped the high of the daily gap. Tanked. Traded into this wick. Order block, breaker block. Tapped into that. Tapped the low of the daily gap. Tanked. Failed to get below this low. Traded up higher. Tap the daily gap again here, the low. Breaker block. Tanked. Traded below the low. Just a good practice to look at what has happened in the marketplace. How was it reacted around the levels? Order block here at this level, fair value gap here. Probably take note of those. Order block, fair value gap. Just gonna make this order block green again. And I want to see how that looks on the 15 minute. Jeez, man. 1 hour. Fair value gap. Well, look at this stuff on a 15. Yeah. I like that 1 hour order block level. Fair value gap. We have a 15-minute fair value gap here as well with an order block in this area. We do have high, low, higher, high. So this would be a breaker block as well. So you have a lot of confluences at this particular level, which overlap with a 4-hour order block. For the sake of the video, I will make this red so that it stands out. As a filter, use this 15-minute fair value gap. If we stay below that, look for bearish prices. If we trade above it, stay above it, it's probably then going to trade higher. We still have relative equal highs here as well. Even though this would be used, I would use that as an order block, trade it into this higher time frame level, extend that through. Trade it, look at the mean threshold, trade it up into that gap, pull the gap through. It's sitting inside of that gap, consequent encroachment, traded lower, fair value gap, lower. So this is another gap that I would look at on the charts. 15-minute fair value gap. Just keep in mind that, again, the calendar is a minefield. Today, tomorrow, for CPI, and Thursday is still has a lot of news events as well. So be cautious. Minefields. So that means scalping, session liquidity, and don't hold on onto it thinking that it's going to keep on trading higher or rallying down lower. You get in 5, 10 handles, X amount of handles, whatever you're looking for. If you get that partial, and get out of there. Partial and get out of there and take it home. These are not the environments that you want to be gambling inside of. Let's look at the 5-minute. Yeah, there's the 5-minute. Trade below these lows here. Really nice. Really aggressive as well. Showing you how it respected this daily gap here. Trading now lower from that. 1 minute. Don't like the fact that we have these equal highs sitting here on a 1 minute. Also have relative equal lows down here. So that's something to keep in mind. Be mindful of that. Keep in mind that the Dow does like to trade opposing the dollar. So if dollar is going to be tanking, Dow is likely going to be reaching higher. Again, something it's not going to be applicable 100% of the time. There will be times where it is just going to be trading with dollar. But that's something that you could look at as well. Back to the US 500. There we go. Trading inside this inversion now. Just gonna pop this thing back over to the US 100. There you guys go. There's that. Traded above this 15-minute fair value gap inside of this inversion. As long as this inversion stays in play and we stay below that, then I would be looking for shorts to go towards those lows. We still have seasonal tendency, bullish prices on that seasonal tendency being indicated. We do have equal lows in play here. Market structure has shown a respect at this daily breaker as well as the daily inversion. So as long as we stay below this, I would want to see a short. And if we trade above that, then higher prices might be in the books. Just again, it comes down to looking at how the market reacts around those levels and how we trade around those levels. And if it's going to do this, then you're going to be looking at that. If it's going to be doing that, then you're going to be looking at this. So it's a process of, if it's doing this, I'm doing that. If it's doing that, then I'm going to do this. So it's not just you playing a guessing game. It's following a process. On dollar index, we are rallying towards this relative equal low here, which that is good. But so far, the indices are trading higher when dollar is rallying down lower. So perhaps if at 8:30 we can clear this low with dollar index, then we might find something on the indices that we could use as a potential short if we are inverse. If we start trading in sync, then we will have to see what is in price at the time and how we will approach that idea. Price action has been just rallying higher since Thursday last week, by the way. So if it's rallied higher since Thursday last week, retail are going to be looking to get long. If retail is going to want to get long, it will be a fantastic idea. Take that 830 PPI, shoot it to the sky, get every last one of them to go long, get them trapped, and then start tanking it down and start and get below these equal lows here, or get below these relative equal lows, and just tag everybody that's been in a profit long, just tag them out, because they've been dragging them. Look at that sideways. They've been dragging them. Give them a little bit. Take it right back down into that same range. Drag it up higher. Take it right back down. It could do the opposite though, since we have been trading higher and everybody's got their stops below there. Just tank it right down. Send that puppy right down. Bam. Take him out. And then uh, it's either going to then give a retracement and continue trading now lower, or they could from there take it up higher. Dig deeper into this daily inversion. Couple of different ways of just looking at this and thinking about it. We'll just have to see how it ends up playing out. We've covered a couple things today, which I believe would be salient to any new trader. Today is not going to be a tape reading session. Again, the tape reading session will start Friday on 8:15, and we will stick around as usual until the 9:40. And if price is interesting, then we could stay longer up through the 8:50 to 10:10. It just depends how price looks at the time and what we have in the charts. But I believe I've covered a whole bunch of salient points. And hopefully, some of you guys that had questions about those things had those questions answered. Like I said, a lot of new traders come into this thinking it's you got to find the model, you got to find a way to get involved, when that is 10% of the work, is pushing the button and having it trade to your target or getting involved. There are multiple ways to get involved in a position, and defining a model is the beginning stepping stones of your trading. Sticking to that model is another very, very important uh, factor. It's not going to be any use to you if you jump around from model to model, or if you're, for instance, using an order block and then the order block is not doing so well this week. So you decide to jump over to a fair value gap. Sometimes, as with everything else in trading, sometimes the fair value gap just is not going to be present or presented the time that you expect it to be presented for that particular week. In the days that you sit down, the order block might present itself in the afternoon session. And if you're not trading the afternoon session, then obviously that is something that you would not be participating in. Are you going to feel FOMO about that? You should not be feeling FOMO about that, even if it rallied, if you did not participate, because these things repeat day after day, session after session, and it's not going to stop unless there is no market left. So that should not be something that you should be worrying about. You should be worried about getting yourself sorted out, getting yourself emotionally sorted out, and getting your journal out, getting those utensils. And that is how you track your progress. And that is how you identify your sticking points as well. Journaling, you start noticing, okay, but I'm struggling with this. So that is something that I got to focus on. And then you start focusing on that, and you work on those problem areas. Like you might be struggling with execution. You might get freeze in the moment. Like, price is right at the level, it's at the fair value gap. You just got to press the button and get involved. it rejected the level. You just freeze in the moment. You're not able to press the button. Damn, you missed the trade. That is something that you're going to journal, and you're going to journal that in a positive way. You're not going to go in and say, "Oh, I missed the fair value gap. I screwed this up." You're not going to do that. You're going to journal that in a positive way, and you would be saying something like, "I saw the fair value gap coming, but I hesitated to take the execution, but next time I will take the execution with the stop in place, with the take profit in place, because that might be your sticking point. You might be worried about taking that entry, and then you're going to figure out, oh, where am I going to put the stop? Where am I going to put the take profit? So then what you do is you go in and you find a structured way to overcome that problem by saying, okay, if I have that fair value gap that I expect price to trade into that particular gap and reject and trade down lower, the stop, you should be able to predetermine that stop loss before you get into that position. You should be able to predetermine the take profit with relative equal lows in place, and you're going to look for X amount of handles to trade, and that's going to be your take profit, or you're going to partial something and then move the stop into a profit. And what does that do? That kills the emotion behind taking that entry in the first place, because you're afraid that you're going to mess up the stop, or you're going to do something wrong. And what that also does is you already know what the risk is going to be. So you know, before you're getting into that, okay, I am committing X amount of whatever. If I'm doing one contract or I'm doing one micro, then I am committing X amount of money to that particular position. So that is whatever percentage of the account. So you already know going in, if that trade doesn't work out in your favor, then that's what you're going to be losing. And then what you do, you don't look at every single trade that you take as a make or a break scenario in your career. You look at a set of 10 trades or a set of 15 trades or X amount of trades or a week or two or a month of trading, and you look at the probability over a course of that time. And if you execute exactly as you should, you stick to your rules. If you take your losers and you take your winners, at the end of the month, if your logic is sound and you have figured out your sticking points, and you look at the course of a month, or you look at the course of 10 trades, and you look at how many you won, how many you lost, and even if, as an example, let's say out of the 10 trades you lost, let's say you took losses on 6 of those 10 trades, but the 4 winners that you had rallied to your take profit, snap, but those 6 losses were managed losses. So they were all small, minute little losses that were very easy to recoup in 1 or 2 positions. So out of the 10, the first trade that you took might have already recouped more than half of what you've lost in the 6 trades, and the 3 trades that you have left is going to end that particular period, X period in time, with a profit. So it's also not about, oh, I've got this many losers, more losers than winners. It's about managing the losses and making sure that the losses are not completely out of control, but they are calculated risks. That if you lose, you know you're going to lose this much, this much. It's not the end of the world, because chances are, if you're going in there with a big sizing in the position, then chances are you're probably going to be on the edge. You're going to be stressed. You're going to be worried, because if you're going to take a loss, you're probably going to take a relatively big loss, and it's going to be difficult to recoup that. So again, that is where you have to apply proper risk management. Remember, rule number 1 is risk management, capital preservation, risk management. So you have to stay in the game to come back tomorrow. That is rule number 1. If a beautiful A plus setup is right in front of you, but if you have a set risk parameter that you are able to take, and if that specific parameter or that specific setup is higher than that predetermined parameter that you have solid in black and white on your model, on your rules, you're not able to take that setup. If you are trading one standard or one mini, or if you're trading one micro, whatever it might be, if you're not able to downsize so that you're able to meet that specific requirement of risk, then you're just not able to take that position. And that's not something that you're going to go home about, being going to be mad about, something that you're going to feel FOMO about. It's going to repeat. There's going to be another A plus setup, and that one's going to meet your requirements, and you're going to execute on that setup, and you're going to take it home. So once you start trading multiple minis, multiple micros, then yes, it is possible to downsize the position and only take one micro per se, or one mini, and then you're able to take that position. So later in time, that might be something that you might be able to do. But in the beginning, obviously, that's not going to be something that you're going to be able to do, because you're not going to be able to size it down unless you're comfortable and you started out trading your micros, or you're coming from a funded thing and you're going into a live environment and you're trading mini contracts. Then you're going to size it down. Okay, I'm doing one mini, and that's good enough for me at the moment. Okay, as per example, you're going to take that one mini and you're going to pull it down. 10 micros is one mini. So okay, so I can do maybe 4 micros on that particular trade, and I can still take something home at the end of that trade. I can still take something home. So it really comes down to a lot of things. And it's important, just if you've got questions on these things, your journal is the best place to just write them down. And as time passes on, and as you go through ICT's content, as you watch maybe somebody else's stream, or you study, whatever, eventually you're going to find the answers to those questions. And a lot of back in the day, a lot of people, and before I'm going to close this, a lot of people used to always be worried in the Telegram groups. Everybody used to be worried about ICT charter content. Anybody got the charter models? Everybody was looking for the charter models. And that just was not it. It's just a model. It's just a simple way to get a cookie cutter. How am I going to get my cookie cutout. How am I going to get my piece of the meat? But that those 10 models, they didn't cover everything else, all the emotional things. Didn't cover the tape reading that you had to, didn't cover the journaling that you needed, the back, forward testing. Didn't cover the emotions that need to be sorted out. Didn't cover the sticking points that you would have. And that is why ICT said that the real, and a lot of his students said the same exact thing too. The real mentorship was inside of the lectures that he had, the review videos. Those are exactly the same. If you go back to the 2023 mentorship as an example, it's exactly the same thing. That is what he's doing live on YouTube. Is he is sitting down on those live streams, rambling, talking about the market, talking about how it's trading at certain levels, certain times, how it's reacting at certain things, how you would want to see it react. He's talking about certain market conditions that you can expect to happen at certain days with certain news events, which of those you should be avoiding, which you should of those you could potentially get a setup, how to trade how to anticipate high resistance, how to anticipate low resistance liquidity runs. That's exactly what he did in those videos. And that is the real mentorship, because that's the stuff that everybody wants to learn, but everybody doesn't want to sit through. Everybody wants to watch those core content stuff and think, oh, that's great. They'll be able to trade once they finish that. When in reality, you're not going to be able to trade once you finish that. That gives you a foundation, a model, yes, a cookie cutter, but you're still going to have to piece a lot of stuff together. You're still going to have to get your butt in the market, and you're still going to have to do a lot of journaling. You're going to get a whole bunch of sticking points with a lot of personal stuff in your own life that you're going to have to sort out. You're going to get a lot of emotional stuff that you're going to have to sort out. And that's where the real gems were, in those long-winded lectures that he had. And he's done those on YouTube, and I'm sure it still blew over a lot of people's heads. So you got to be willing to sit through that stuff and be able to learn from those environments and a lot of the things that he talks about, covering psychology. And that's where the real mentorship happens, people. And that is why ICT teaches the way he does, because he filters out the lazy, he filters out the people that don't want to put in the work. And that is how he had the best, could I say, advertising plan, whatever you want to call it, by doing those mentorships where people ended up leaking his content, and it just started spreading like freaking wildfire, baby. That is what happened. That is one of the smartest ways to advertise, if you're asking me about that. He got his name known without even trying to do so. And he did all of that intentional. That is for sure smart, if you ask me. What a man he is. Anyway, with all that said, we have now traded through this 15 inversion, through the high 832. Market maker buy model has now been complete. Equal highs there. Nothing that I would want to be involved in. No clear entry here. I was looking for shorts this morning. Like I mentioned here, dollar index tapped its relative equal low. Let's tap into this 15-minute breaker block. How convenient. Tapped into that and bam, it's off to the lows. Tanked it down. So with it trading the lows and everything else being in sync, trading higher, tapping this high, we tap the highs across the board. Dow, ES, NAS, tapped into higher time frame PD array, daily inversion. This could set the stage for a short. We still have a lot of equal lows in play. Like I said, they're either going to tank it down, take those guys out that were long, or they're going to bam it up one more time, get everybody that wants to get into this involved in, and then they're going to tank it. At least that would be my expectation. And again, you're going to have to use a filter like this inversion, see if it wants to trade below that inversion, or look at a 5, see if it wants to get below. There's a little inversion there. I wouldn't really use that one. Probably use something like this, pull through. See if it gets below that, then you're going to be looking for a short. You're going to be looking for it to trade down lower if it wants to do so. Could just rally higher. It has rejected this 15-minute inversion. Could still rally up higher. That is in line with the seasonal tendency. Could still seek to push into the consequent encroachment of of this daily inversion. Could still do that as well. So again, not a high probability, not really a high probability week with CPI tomorrow. So it might clean up a little bit after CPI. Might start to clean up a little bit. But hopefully you guys have learned something here, and hopefully this was insightful. Until I see you guys in the next one, which is going to be Friday morning at 8:15. Until then, be safe.